Welcome to Business Morning. This Wednesday, the 16th of May. I am Bosin Let's give you the top business and market stories we're focusing on at this time. It is time to talk up on anti-corruption. And on Tuesday, President Buhari says he will not allow a repeat of his 1984-85 anti-corruption program when he was removed as the head of state and when recovered stolen monies were returned to the looters and he was remanded in detention. President Buhari was speaking on Tuesday at the inauguration of the new multi-billion naira headquarters of the Economic and Financial Crimes Commission. The president says, quote, "Since 2015, we have made significant progress in the fight against corruption. Everyone now knows that corrupt officials will be held to account, no matter how long it takes." The president adds that, quote, "It is my hope and expectations that the judiciary will continue to bring corrupt people to book." The president, however, says a few things about the structures, and he says that structures are not the whole story, as the country needs to build structure, but he says we must change our ways of handling public trust. Corruption not only kills governments, but destroys societies. That's according to the president. Last week, the former head of state general Yakubu Gowon, retired, says his administration did not practice corruption, but became a norm after his regime ended in 1975. So corruption, anti-corruption, one of the top stories in the news, and everyone's following that. Now we have a brand new Companies and Allied Matters Act. This is very important for Nigeria, and you need to listen very carefully. From 1968, when we had the first Companies and Allied Matters Act, that was left unrevealed until 1990. So we had a touch-up of that, of this important business law in 1990. Then we left it again untouched until 2004, when there was an update on the Companies and Allied Matters Act. Then it was left again untouched for another 24 years. Now the National Assembly has breathed a new life into Nigeria's Companies and Allied Matters Act, called KAMA. The Senate passed the new amendments to ease business for small and medium enterprises and to help startups in the Nigerian business space. It will also boost investment, including the securities market, and save companies from total collapse. You don't want to miss this two-part conversation from 10:15 this morning to 10:50 with Ayodeji Ebo, who is the managing director of Afrinvest Securities, giving us our first word and unveiling what we know at the moment as far as the new KAMA is concerned. And everyone should take his pen and paper and listen. Now today we may see the end of the budget 2018 at the National Assembly, if all go well. Yesterday, the Joint Senate and House Committee on Appropriations increases Buhari's budget 2018 headline figure to 9.12 trillion naira from 8.64 trillion presented last November. That's adding about 510 billion naira and raising the total figure to the top of 25 billion US dollars. The legislature increased the country's capital expenditure for next year, or 2018 budget for this, I beg your pardon, to 2.869 trillion naira against the 2.652 trillion naira presented by the government in November. President Buhari, in the first week of November, presented a recurring expenditure of 3.4 trillion naira. Now the Legislative House have raised that to 3.51 trillion naira. And the statutory transfers that are contained in what the president presented last year is now being raised to 530.4 billion naira. In terms of debt servicing, that figure, the National Assembly added about 200 billion to the figure. You can see that coming up on your TV screen. That's 2.20 trillion from 2.01 trillion in the draft document. In terms of the parameters, a few of them. The oil benchmark, and this is where the story is already on social media, folks are making comments. Why the National Assembly decided to raise the crude oil price benchmark? President Buhari proposed $45 per barrel. The National Assembly says they want $50.5 per barrel. And the reason is simple. The legislator says Brent crude oil is now about $80 a barrel. So we might have just raise the budget benchmark from $45 to $50.5 per barrel. Meantime, the National Assembly's Committee retained the exchange rate of 305 naira to a dollar as the exchange rate to measure the 2018 appropriations and oil production at 2.2 million barrels per day. That's the story on the budget. So you have quite a lot in your business box this week to discuss. Today, we're expecting the upper and lower house of legislature to pass the budget. And as expected, perhaps the executive will finish off on that before the end of the month. And the president will put pen to paper. Meantime, one of Nigeria's big integrated energy trader, Forte Oil, is moving forward. Yesterday, Vetiva Capital issues a new analyst report on the listed integrated energy company ahead of its May 28 annual shareholders meeting, where the company will be divesting or restructuring its operations and selling off all its subsidiaries. The AP Oil and Gas operating in Ghana will be spin off, including its shareholdings in Amperion Power Distribution Company, which is the holding company for the Geregu power plant, of which Forte Oil is a shareholder, and then the Forte upstream services in Nigeria's oil business. So Forte Oil is spinning off those three companies, and we'll be asking the shareholders at the shareholders meeting May the 28th to approve that decision by the board of directors and spin them off to concentrate on what you call the downstream business. The Vetiva report says it's no surprise at the divestment plans by Forte Oil, as the subsidiaries contribute a paltry 3.7% of the company's gross profit since 2011. Vetiva is therefore saying that total deregulation of the downstream sector is key to the post-divestment for Forte Oil PLC, looking at what the Buhari's administration will do in the near term in the oil sector, the downstream, that is, and that the missed earnings trajectory, target price revised lower on liquidity issues. We have a lot more to talk about on this, so let's get the conversation going with Olalekan Olabode, who is the head of research at Vetiva Capital Management. He's joining us via Skype from Victoria Island in Lagos. Olalekan, good morning. It's good to have you here.
Good morning. It's great to be here.
Yeah, this is a very interesting 5-page analyst report from your company late yesterday afternoon. What's the summary of this report vis-a-vis the divestment or the restructuring plans by Forte Oil?
I think that, the communication we got from Forte is that they plan to divest some of the subsidiaries. So they're planning to sell the downstream company in Ghana. It's 100% owned by the parent company. They also plan to divest their interest in the power sector, and also plan to exit their upstream oil and gas business. So from this, they are actually going to be focusing on the downstream retailing business, which had been the major or the biggest driver of revenue, although profitability had been largely driven by the power company. When you look at this divestment story or this divestment plan, it's not fully solidified yet, because they still need to get approval of the shareholders from the AGM that's going to hold in the next 2 weeks. We think that, okay, as I was saying earlier on, I think this is quite surprising to us, particularly for the power business. The power business is actually a very strong revenue and bottom line driver. It accounts for about 25% of revenue and even over 25% of bottom line in recent years. So that the news to divest the power business is kind of surprising for us.
Well, okay, well, we have a few more questions there for you. But again, this divestment would also include the AP Oil and Gas in Ghana and the Forte Upstream Services.
Yeah, sure. I think for us, those two are really less significant. To start with, the AP Oil and Gas in Ghana have been making losses for the past 3 years. It's a relatively struggling business. The business environment in Ghana is relatively tough at the moment for that player. So this decision to sell that part of the business is not too surprising. And also for the upstream services business, also that accounts for a less significant amount of their revenue, their bottom line, and also their asset. So these two businesses together or combined account for less than 10% of the business, 1% and 9% respectively. So
Olalekan Olabode there. Okay, I guess we got a bit of a freeze in there. We'll get at you back. Lekan, let's continue from there.
Sorry, I didn't get that.
Yes, we just got a bit of a disconnect, very wonder. But I was still going to ask about. Let's step back into the energy business, where Forte Oil just invested north of $100 million in Geregu power plant in Kogi State, and as you said earlier, that power plant contributing a lot to its bottom line and the top line as well. And of course, the federal government, being a shareholder, has been having some nice inflows from Forte Oil when it comes to the Geregu power plant. Is there something in the works about the deregulation in the downstream sector that Forte Oil is aware of, that the rest of us is not aware of, that it wants to spin off very quickly and concentrate 100% in downstream business?
I think one of the reasons why they will be looking to divest their interest, or to sell off their interest in Geregu, is that we know that the power sector is quite profitable in the long run, but there are a lot of liquidity challenges. A number of these players have not been getting, or they have a lot of receivables on their books, and that has actually affected operations. The 701 billion fund recently actually eased that pressure, but if you look at the number of them's books, you still see that they carry huge receivable on their books, and that's one of the reasons why they are looking to divest that business. One thing you agree with me is that they say in finance that it is actually easier for a company to die from liquidity than profitability. If you are not profitable at the moment, you can still continue to run operations, but once you are not liquid, the company can actually die overnight. And I think this is one thing they are actually looking at. To talk about the downstream deregulation part, the company, Forte Oil, to start with, is a very strong brand in the downstream sector. They strongly believe in their ability to milk that sector and to get value from that sector. I don't know if they have any intel about possible deregulation, but internally at Vetiva, we think that the full deregulation of the downstream sector is something that we would expect in the near term. Maybe not before, definitely not before election, but post-election, we think that there will be continued talks on possible deregulation of that sector. And when we have a full deregulation of that sector, then it will be easier for the players to actually penetrate the market, and that sector will be more attractive.
Okay, just about 1 minute or less. How do we trade this new direction for Forte Oil in terms of its earnings, in terms of what a share price should be? Give us your thoughts at Vetiva Capital.
I think for us, we currently have a hold rating on Forte Oil. We value the stock at about 77 naira, 75 kobo. The reason why we have a hold rating is not because of the upside. We still think that the stock, currently based on its operation, has a lot of upside to where market is trading. But for us, we'd like to get the outcome, or to find out about the outcome of this AGM, if shareholders are going to approve this move to divest the subsidiaries. We think that, particularly for the power business, their investment in the power business, we think it's quite key to earnings going forward, and this would actually have a long say in terms of our expectations for the outlook for the company. We currently place the stock on hold, but we are quite positive about the stock's performance.
Thank you so much, Olalekan Olabode, Head of Research at Vetiva Capital Management. Okay, now we have it here. The executive summary of the new Companies and Allied Matters Act, okayed yesterday by the National Assembly, is quite extensive. So we're going to have an extensive conversation this morning around this new act. That means a lot in opening up Nigeria's business and investment space. Welcome, Ayodiji Ebo from Afro Invest Securities, the Managing Director, to the show after the break.